Since the start of 2023, the S&P 500 is up nearly 50%. Now, if you're brand new to investing and you just started, these aren't gains that you should get all that accustomed to. After all, if you go back decades, the S&P 500 on average typically gains between 8 and 10%. However, even with those gains, if I go back to the start of 2022, you could see that the S&P 500 is actually only up about 18%, which tells an entirely different story. These huge gains we have seen are rebounds from the crash we saw in 2022. So did we miss the big gains, or is there more to come? Well, historically, we're entering a choppy period for the market, but on the horizon is Q4, which historically is a great time for the stock market. So in that case, where am I looking to put my money to work? In today's video, we're going to be focusing on two ETFs that are extremely high on my radar. And I believe both of these ETFs have the potential to double over the next few years. But before I unveil which two ETFs we're looking at, do me a huge favor. Click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And if you're interested in seeing more stock picks, consider checking out the Motley Fool, where they have a ton of great resources and products available for investors of all different levels. And right now you can go to fool.com/Mark to sign up to receive their 10 best stocks to buy right now, completely free. All right, let's jump back into today's video, taking a look at two ETFs that I believe have huge upside, and they've already had great performances over the past 12 plus months from that standpoint. Beginning with our first ETF, which is the VanEck Semiconductor ETF, stock ticker SMH. And odds are you've probably heard of SMH. It has blown up in popularity over the past few years. One company that they have to thank for all of that is NVIDIA, which is a company that has just exploded over the past 3 years. In terms of assets under management, SMH has $23 billion, and over the past 12 months, the ETF is up 66%, but when we broaden out over the past 5 years, it's up nearly 350%. If you are simply looking for broader semiconductor exposure, there's not many better options in terms of ETF options out there than SMH. Now, does that entirely go to say that this is an ETF we need to buy right now? No, not at all. The August 5th crash that we saw briefly, momentarily, was a great opportunity. But keeping this high on your list, because why do I believe there's huge growth ahead? I still believe that this AI boom that we're going through is a 4-phase process. We're going through the first phase with NVIDIA. Then we need to go more to the infrastructure. Then we need to go more to the software side of things and implementing a lot of this. So to me, we are still in the early stages, which is going to benefit a lot of different companies within SMH. What are some other reasons that I believe we are still in the early innings? Just look at the spending habits that have been coming out of the large companies, the Mag 7 companies, which all of those companies to a degree got dinged on the amount of money that they're spending. Where are they spending that money? On artificial intelligence. Look at the sheer numbers from Amazon, Microsoft, Google, and Meta. All of these numbers, they are increasing, not slowing, but growing. And all of this, the majority of this, is spending on artificial intelligence. In fact, the Alphabet CEO, Sundar Pichai, made the comment around the risk of under-investing as it pertains to AI. All of these companies are looking to gain efficiencies, not today, but in the future. This is a process. All of this spending right now is going towards companies like NVIDIA, AMD, Broadcom. But then as those companies continue to ramp things up, they need new equipment. That's going to benefit companies like Lam Research or ASML. It's a continued cycle, and all of these companies I just mentioned are all held within SMH. Let's now take a look at the top holdings within the portfolio, where you could see NVIDIA at the top with 21% exposure, followed by Taiwan Semi at 14%, Broadcom at 8.5%, AMD at 5%, Texas Instruments 5%, ASML 4.6%, Applied Materials at 4%, Lam Research at 4%, followed by Qualcomm at 4%, and KLA at 3.8%. The ETF is very fixated on a small number of companies with only 26 holdings. So the top 10, you're going to get heavy exposure to, with 74% exposure to these top holdings. And when I look at these top 10 holdings, I like the majority of them. It's crazy to think that you could look at NVIDIA and build a case that it is still undervalued. Given the growth estimates moving forward from a PEG ratio standpoint, the company is not crazy. AMD is the same way. I believe huge upside from those companies. I like Lam Research as a recent buy that I had. I like ASML. And then you add in the likes of Broadcom, which I've liked for a number of years, a great dividend grower, and even Qualcomm for that matter. And given the fact that this ETF is loaded with all of these high growth semiconductor type companies, many of them don't pay a dividend. You got Broadcom and Qualcomm that pay pretty solid dividends and grow their dividend at a great clip, but many of them either don't pay a dividend at all or pay a very small dividend, like in the case of NVIDIA. So when it comes to investing in SMH, it's going to be solely focused on growth, not much on dividend at all. And I believe SMH still has a ton of upside over the next few years. And that brings us to the second ETF on our list, which is going to be the iShares Cybersecurity and Tech ETF, stock ticker IHAK or IHAK. This is a continuation of two of the major themes that I talked about at the beginning of the year. One being AI, which we just looked at with SMH, the other being cybersecurity, which we're now going to look at both the cybersecurity component and AI with IHAK. Cybersecurity is only going to continue to grow as hackers get even more sophisticated. So it's not really a one size fits all. These companies need to continue to evolve. And what do investors love to hear when they're investing in some of these companies? Annual recurring revenue, or ARR. Many of these companies utilize subscription-based revenue tactics. Even before all of this AI craze, cybersecurity was gaining steam. Now, after all of this AI craze, cybersecurity is even more important. Taking a closer look at the ETF, IHAK has assets under management of $880 million. Over the past 12 months, the ETF is up 28%, and over the past 5 years, it is up 93%. Now, I'm not crazy about the 0.47% expense fee, although it is slightly below my rule of thumb of 0.5%. Everything is seemingly going digital these days, so cybersecurity is a top priority, even more than those AI efficiencies. Hack after hack is what we've been hearing about over the past few years, so cybersecurity has to be at the top of the priority list for all of these companies, and they cannot cut corners. Investing in IHAK, similar to SMH, isn't going to necessarily broaden your portfolio because, again, we are fixated on a specific niche within the technology sector. So if you're light on, say, cybersecurity in that niche, IHAK is going to be a great ETF to consider. Let's take a look at the top holdings. And at first glance, you may notice a key cybersecurity company that's missing from this top list, which is CrowdStrike. But that's due to the company being a top holding prior to their debacle recently. And the drop-off in the stock price dropped its weighting outside of the top 10 within this ETF. The current top 10 includes SentinelOne, Varonis, Trend Micro, Fortinet, Checkpoint, CyberArk, Palo Alto, Akamai, CACI, and Juniper Networks. These top 10 account for 45% of the ETF, and in total, the ETF has a total of 47 holdings. Another notable name missing from the top 10 is Okta, but it is also a holding within the ETF slightly outside of the top 10. AI and cybersecurity continue to be two trends that I believe are going to continue to trend higher. But they're also, with these ETFs, they're going to add a lot more volatility. IHAK is, again, not going to give you much in terms of dividend. There's no dividend focus here when it comes to IHAK. Strictly a growth focus with both of these ETFs moving forward. I think it's a smart idea to keep both of these ETFs on your radar. Look for opportunities with pullbacks in the sector or market-wide from that standpoint there, and add to them, because I believe we are going to see sizable increases over the next few years. And these are going to be the main leaders: AI with SMH and cybersecurity with iHack. There's a number of other notable ETFs to consider. These are two that I like that are high on my watch list to add to my portfolio. Down in the comments section below, though, if you could only add one of these two ETFs, which of these would you add, and which of these do you believe is going to double over the next few years? And with that being said, I hope you enjoyed today's video, and if you haven't done so, show your appreciation by hitting that like button. It helps with the algorithm and really pushes this video out to a broader audience. And if you also haven't done so, make sure you subscribe to the channel so you're notified anytime we're having a live show, a webinar, or whatever it may be. I thank you again for watching, and we'll see you in the next one. Take care.